Good morning. Welcome to Market Day Report. And here we are on a Thursday. Thursday in a normal week means a weekly export sales report. We did get that this morning. It's a normal Thursday, so we'll break that down with Brian Hoops in just a moment. First off, let's jump into the markets and the corn market in the overnight session. In the red, 493, down a tick there, with the December at 468. Half penny lower on the session. Over to soybeans, and the March contract gaining a little over a nickel at 10.62 and a quarter, while the May contract 10.77 and 3/4, 5.5 cents higher on the overnight session. Soy meal contracts were higher, and soy oil was mixed, with the front months moving higher. Now to the wheat market. And when we look at wheat, we actually see higher trends in Chicago. July gaining a couple of pennies after hitting $6, but settling in at 5.98 and 3/4. What about hard red? Well, July contract penny and a half higher, 6.12 and a quarter. And the spring wheat contract December tick lower, 6.65. Finally, cotton New York December up 29 at 69.01. So let's break down some export numbers. Brian Hoops, President, Midwest Market Solutions. Good morning, Brian. What did you see from the report?
Hey, good morning, Tony. There's no shortage of information coming out this morning for these markets. First of all, there's some rumors out there that there's at least one company reporting 5 to 6 cargoes of soybeans have been bought from Argentina overnight of soybeans, and another 2 to 4 cargoes from Brazil. So there's some rumors that a lot of this product is being shipped and being purchased out of South America. Now, when you look at our export sales numbers, we're definitely seeing a slowdown for our soybean sales, and we're seeing an uptick in cancellations. So looking at our numbers, 14.3 million bushels of soybeans sold last week, way down from what we've seen in the last 3 to 4 weeks. And there was 9.7 million bushels of soybeans by the unknown destination that were previously purchased that have been canceled. We're also seeing a little bit of corn purchases being canceled. That's about 6.7 million bushels of corn. Now, last week's sales were still very good at 58.2. And one of the real benefits to that dollar weakening that we've seen is an uptick in not only livestock exports, but also wheat. Wheat's improving here, about 18 million bushels last week for wheat sales, a really good number compared to where we have been. So soybeans definitely disappointing. Corn at the top end of expectations despite those cancellations, and wheat also at the top end of expectations.
And I'm also looking at the inspection, so what's actually moving out here, and we're above the 4-week average for corn and for cotton. Cotton kind of surprising me there at 221,000 running bells, but even sales disappointing for the cotton market.
Yeah, you look at the cotton, that's another market that would really benefit from a cheaper dollar. That market's kind of been in a downtrend, so you're getting the benefit of a weaker dollar and weaker price levels, stimulating a little bit of demand, which is, what the market is supposed to do, find a price level that'll stimulate demand, and that's what I think has started to happen in the cotton futures.
Well, and you mentioned the dollar. Let's go to the dollar index quickly this morning. Where are we trading? It's higher, 107.81. Now, we haven't hit the 108 yet, but seems to be in sight. And when we talk about cotton, we've got to talk about crude, because that's how we end up with man-made fibers. Crude oil at 71. Again, maybe it's a little more, effective to use man-made fibers than the natural fiber based on price. So again, just something else we're watching. But in the energy markets, anything you're watching?
It seems like a daily announcements that come out of either the White House or OPEC about production increases, decreases, what China's economy is going to do as far as their demand for U.S. products. It's been a very volatile week for crude oil. They've traded in a wide range, both higher and lower, without a lot of real conviction. So we've ran stops this week, and I think that market, from a seasonal standpoint, wants to try and bottom and start to move higher as we start to get summer blends mixed into the equation. That usually means a little bit higher prices, better demand, but at the same time, this administration wants prices lower, and they're going to try and stimulate production to try and get more supply into the marketplace to get prices down and get those inflation and energy, food costs all lowered as well.
All right. We'll take a break. We'll come back in a moment. We'll talk livestock futures with Brian Hoops. Market Day Report continues right after this. We talk about the beef market. We often talk about cash cattle, but we also have to keep an eye on the export markets as well. We'll talk about that in just a moment with Brian Hoops. First off, let's jump into live cattle futures. And we're $1.72 higher on the February at 203.60. I say we're at that. That's actually where we settled at the end of the session yesterday. No overnight trade for the livestock markets. April at 201.30. That was up 265. So as we're watching that rally, if you will, in live cattle, we're watching a rally in feeders as well. 270.72 up 247, and $3 gains for May, August, and September. Hog market in the session yesterday finishing higher with February at 86.65 up $1.57, and April $1.80 higher at 91.55. Let's bring back in Brian Hoops, Midwest Market Solutions. Export sales positive?
They certainly were. We mentioned in the first segment the weaker dollars stimulating a little demand for cotton and for wheat, and it seems to be for beef and pork sales as well. They were very strong, 24.9 million tons of beef, and for pork it was over 50 million tons this week. So better numbers there for sure for both beef and pork. Now, there's a lot of news for cattle this morning. There's been a little bit of scattered trade yesterday at about 205 in Kansas, just a handful of trade, but that's down $3 from last week. We also saw some dress trade at about 328 or so, 329. That's down $1 from a week or so ago, and just a little bit of negative cash news there. But the real source of negativism comes with the declining box beef values. Packers just began the week trying to cut their kills, and that propped up the boxes, but now they're expanding those kills again, very similar to what they were the previous week. They're down from last year, but they're not cutting things, and boxes are falling here, and that puts the Packer margins a negative $203 ahead this morning. So that's not great news for the cattle industry overall. We've heard some reports that there's about 500 head of cattle have come across the border from Mexico as part of the initiative to get cattle imported into the United States once again, as long as they have dealt with the hookworm, or screwworm, I should say. So it's there's a lot of news for this cattle. Not a lot of it is positive. I think this bounce that we're seeing is more technical in nature than anything, and we had a 38% retracement yesterday. Maybe we can hit that 50% today, or even the 62, but you have to wonder if that's all we're going to get until this situation with the negative Packer margins start to improve and Packers are able to pay higher money for their cash products.
All right, Brian, we're talking before the open here on a Thursday. Let's see how the Thursday session shakes out, and we'll see you tomorrow. Get an update on how we traded today and a look into the weekend. We'll see you tomorrow. Brian Hoops is with Midwest Market Solutions.